Peace, 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 peace. Appreciate y'all for joining. Peace. Yeah, we're about to do some market analysis real quick. Run through these opportunities, break down what markets and how you could potentially benefit, make you some good money. Start of 2023. All right. I do this pretty much two or three times a week just to make sure everybody's up to speed on what's happening in the market, how the market is moving, where the market potentially may go, and how you can benefit and make some money. All right, so we're looking at the Nasdaq futures right now. All right, the Nasdaq futures right now. As you can see, we had the start of the month. The start of the week was at a peak. It rejected, started working its way back down, and now we're bouncing. All right, so just for my students, for people who are familiar and the people who are experienced, you pretty much understand how I measure the market and break everything down. I like to start at a bigger time frame so we can kind of see on a weekly perspective what the market may potentially be dealing with. So if we zoom out and look at the Nasdaq on a weekly perspective, you can see that there's patterns that we can capitalize off of if they actually pan out to be what we think they are. All right, so we zoom in. So if you look at the Nasdaq right now, you can see that it's in the consolidation area. Basically, it's been moving sideways inside of this range since September for the most part. So yes, on a day-to-day basis, we do get moves and price fluctuations. You could get a 2, 3, maybe a 4% move in one day, but that doesn't necessarily mean that the market is trending. That doesn't necessarily give you a signal that it's time for you to start investing again. That's just letting you know that the market is preparing to start a new trend, whether that's a continuation of the downtrend in this bearish market, or whether that's a trend reversal and a beginning of an upward trend and taking us into a bullish market. All right. So what I like to do is I like to measure the market using the Fibonacci retracement. Fibonacci is basically based off of nature for the most part. It's human psychology and human patterns and why we buy and we sell at certain prices according to the percentages on the Fibonacci. So a lot of experienced investors and traders use the Fibonacci to make a lot of their investment and trading decisions. So I will put the Fib on this whole move on a weekly chart. And as you can see, gold is the 50% to 60% level. Basically what that means is If we're in an upward trend over the weekly chart, like we're looking at the weekly chart, clearly this is an upward trend, right? So when you go shopping for something, you want to get it on sale. A 50% off discount or 60% off discount is a good range for you to try to buy something that you really want that's valuable, right? Anywhere between a 38% to a 60% um, discount is a good buy. That's a good deal. Anything below 61%, and it's a little questionable. If you start getting down to like 70, 80% off, then you know whatever you're buying is probably outdated, out of season, you know what I mean, expired or whatever the case may be. So we don't really want to invest in anything that's 70 to 80% off because it's even more risky. It may not recover from that big of a that big of a drop off. So 50%, 60%, 30%, those are good areas to look at buying in or investing. So like I said, as you can see the prices moving sideways inside of this range, and you are in a 50% discount area for the NASDAQ, a lot of long-term investors will be looking to execute long positions, seeing that the price is at this particular point. Some people already started establishing positions back in October. All right, and because of that, you can see the market hit that bottom in October. October 10th, the week of October 10th is where the market hit a bottom. All right, a lot of people decided to start investing when it got into that range. Okay, so now you got a nice upward move all the way to the beginning of December, and then you got a retracement, all right, all the way down to in January. So January, the beginning of January, we hit another bottom, and this bottom was higher than the previous bottom. All right, so that's also another signal that the market could potentially be going bullish because you have a higher low than the previous. All right, so that's a good one. Somebody said they're trying to get my link. Hold on 1 second. Yeah, we got some people wanting to join in. All right, very important that you guys understand this breakdown because this is how you make money in the market, man. And there's a lot of people who are interested in getting into investing and trading, but you know, it's a lot of stuff going on in life that can kind of keep you from getting into these opportunities. You definitely want to make sure that you're only dealing with disposable income. All right, you don't want to put yourself in a position to where you lose money that you actually need to survive in an attempt to try to make a quick flip or whatever the case may be. The game is really designed for people who have expendable income because you could lose all of your money at the end of the day, and you don't want to put yourself in that position. You want to actually be able to manage your risk as much as possible. I always use percentages. I like to use percentages. So if I'm going to invest in something, what we got? Yeah. So if I want to invest in something, I'm going to invest with the understanding that I'm not going to put the whole 100% of my investment at risk. That's with any trade. That's with any investment. Anything I'm doing. If I have to put my money in, it's not. It's never going to be all or nothing. It's always going to be a percentage that I'm willing to lose, and if it doesn't work out, and then you know I'll be able to have money left over for another opportunity potentially if I want to continue to try. Because nothing's going to be 100%. You know, it doesn't exist in trading and investing. There's no such thing as somebody that has 100% win rate. That doesn't exist. So, with that being said, you want to make sure you're minimizing your risk as much as possible, or at least managing your risk as best as possible. And using percentages will help you with that. So, I teach my students between 1 to 5% of whatever you invest into a trade or into a investment. That should be your risk cutoff point. So if you make that decision, I'm only going to risk 1% of the money that I put into this trade or this investment. Once you hit that 1% mark, that means you got to close out and take the loss. You know what I mean? Because if it goes beyond that, you're going to be kicking yourself and be upset about not actually sticking to the rules that you gave yourself. So very important for you guys to have that in mind before you actually get into the trade. Also, you want to make sure that you know when you are potentially going to take profit, when you're going to get out. If things work in your favor, Are you going to just let it keep going? That's another mistake that a lot of people make. Some people don't know when to get out. Some people don't know when to sell. Some people don't know when to buy. And there's things that you can do to help you make that decision a lot easier. And that's part of what I teach. But you need to have that already organized in your head before you actually jump in. You feel me? So when you jump into a trade, you need to know, okay, I'm only going to risk 5%, right? Now, a good risk to reward ratio, we like to use ratios, is very smart way to handle any trade and investment that you get into. Risk to reward ratios, to me, having a 2-to-1 risk to reward ratio is the foundation, or I guess you could say the minimum. You know what I mean? So what I mean by that is any amount that you are risking, whatever that opportunity is, you should be looking to double whatever that risk is. So if you say you're going to risk 5% on a trade, that means that you are trying to accomplish a 10% winning percentage or profit potential. You feel what I'm saying? All that stuff has to be organized before you even get into the trade. If you don't have that organized, then you're gonna drive yourself crazy while you're in the moment, and that's when people make a lot of bad decisions. So if we're looking at the NASDAQ right now, I'm telling you this information because I want you to see that the opportunity is here. Whether you want to trade in the bullish direction or the bearish direction, the opportunity is here. Why? Because on a bigger time frame, you can see that the market is in an area where people like to start to take action, and they're already doing it. So if you understand chart patterns, which is another thing that I teach, you can clearly see a double bottom right here establishing. All right, double bottom. What that means is two bottoms. Basically, it looks like a W. All right, and the double top looks like a M. You feel me? So you got a double top up here. When the market reversed in January and dropped January 2022, that basically signaled the bearish trend for the whole 2022. Right now in 2023, looks like a double bottom right here. Now we got some things going on in our economy and some things going on politically and on a global scale as well that definitely are giving us bearish signals. But as far as the technicals are concerned, the technicals are telling us that it's potentially a bullish signal. The technicals, to me, I'm a technical trader. I believe in technicals more than I believe in fundamentals, but you do have to understand the fundamentals. You don't want to miss out on the fundamentals because um, you could be relying on technicals and you could be right a lot of the times, but some fundamental news can come out and bring an enormous amount of volatility to the market that could push it in the opposite direction within a blink of an eye. So you have to be aware of the fundamentals, not necessarily depend on them, but you have to be aware of them. And what I like to do is I like to use the fundamentals as validation. So I see what I see on the chart and I read it and I make technical decisions based on what I see. But once I make that decision and I make my execution, a lot of times the fundamental news comes after the fact and it kind of validates what I already knew or what I already felt like was going to happen. All right, so with that being said, now you have a situation where we're looking at a potential double bottom in the NASDAQ. To me, that's a bullish signal. Until we get some fundamental news that shows us that that's definitely not a bullish signal, then I'm gonna keep that mindset when I'm trading. So this is what I established on the weekly chart. It really ain't that much else for me to do here on the weekly chart, but to basically have an understanding where we're at when it pertains to the Fibonacci. And now by the time I get down to the daily chart, I can take the fib off. All right. And now I'm looking at price action in this current range right here. If I look at what's going on in this current area, I put these blue trend lines on here, and it might be hard for you guys to see, so let's make them yellow. All right, so they stand out. All right, boom. So we got these yellow lines right here. That's like a triangle. That right there is like a wedge pattern. All right, so we saw a double bottom pattern on the weekly chart, and now we're seeing a wedge pattern on the daily chart. All right, very important for us to see that these chart patterns actually give us, they're not 100%, but they give us an understanding on where price could potentially go. and when, right? So usually when you get a situation like this, the price normally will fluctuate inside of the wedge pattern until it gets to the smaller area of it, and then it will break out and go to a different direction, um, and establish an actual trend, right? So this is not something that you want to use to help you uh, guess what or have an assumption on what direction the price may go. It's more so to help you understand that a trend is about to establish. So we already knew that based on the weekly chart and how price was consolidating and how price was establishing that double bottom. Now we're on the daily chart and we can see that we have a pattern that gives us a good area to trade inside of before it actually breaks out and goes into a trend. So how do you trade inside of the pattern? Very simple. You have tops and bottoms. Obviously, have to understand. You have to have pattern recognition, and that just comes with practice. But also understand that you have a line at the top and a line at the bottom. The line at the bottom is support. The line at the top is resistance. So when you get rejections on both of these areas, those are your trade opportunities. Imagine if you would have traded this one on short. Boom. You have a triple top right here. That's another chart pattern, right? So you already know that it's potentially going to break this area down here and drop all the way down to support. That's an easy trade right there. And that would be a swing trade. So if you count how many of these candles there are, this is how many days you would have had to held this trade all the way down to support. 1, 2, 3, 4, 5, 6, 7, 8. So 8 days you could have held this short from the neckline of the double top after it rejected from this resistance area all the way down to support, which we already knew because we had 2 points back here where we basically established that area. So if you measure that, everything is easy to say in hindsight. We understand that, but it's good to actually understand what you might have missed out on, so that way in the future you could be prepared for it. So that's a 5.45% drop on the NASDAQ. That could have been a lot of money. So 2,400 or 2,480 ticks to the downside. Multiply that number by 5, and that's the amount of profit you could have potentially made on a swing trade for one contract in the NASDAQ. Now you get down to the support level and you're ready for a rejection to trade it all the way back up to resistance. That's pretty much what you do. So here you got a bullish engulfing candle. That's a signal to let you know that the price is going to probably go to the upside. It didn't work right away. 1, 2, 3, 4, 5 days of it pulling back. Then you got another bullish engulfing candle. This one you end up taking. If I were to go down to the 4-hour chart, you can see that there's another double bottom right there. All right, so if I zoom in, you can see bottom, up, bottom. That's a little W right there, the neckline right there. Boom. So you saw the bullish engulfing candle on the daily chart. We get down to the 4-hour chart, you can see it rejected the support line. Now you ended up trading that all the way up to the resistance area as well, which was already established based on the daily chart pattern that we had, right? So there's another opportunity. So for that, to trade it from support all the way to resistance, that's another 2,500 tick move, 5.72% to the upside. So this is just a live example of how it really doesn't matter what direction the market goes, to be honest. When you understand how to trade, you really don't care what direction the market goes. You want to understand what direction the market may go, and you want to be able to make decisions off of that information. But that doesn't necessarily mean that that you should put all your time and energy in trying to figure that out, because it's really not important. Now it is important for you if you're an investor. All right, if you're an investor, you definitely want to make sure you understand the direction, because you don't want to be investing when the market is bearish. Some people say that that's the best time to invest. To me, I think that is partly true. I think you should look at preparing to invest when the market is declining. But I don't think you should invest until the market hits a bottom and starts to work its way back up, because that will minimize your risk, because you actually know where the bottom is, you know where the cutoff point is. Remember, you're supposed to be able to understand your risk before you get into the trade. It's better if you see that the market is in the recovery mode So now you can understand where to put your stop loss or where to cut your losses at because a bottom has been established. You feel what I'm saying? That's how I look at it. But as on a trading perspective, I really honestly don't care what direction the market goes. To be honest with you, it really don't matter because we can trade the market going down. We can trade the market when it's going up. As long as it's not moving sideways, we can make money. And then there's strategies that we can use that will allow us to make money when the market's moving sideways as well. So sometimes that don't even matter. You feel what I'm saying? But we do want a trending market. It makes things a lot easier when it's a trending market. So now we understand where we at. We just hit the resistance level on Wednesday. Huge drop on Wednesday. Everybody knew that. Everybody that was in my program was a part of that move. We all had an opportunity to trade and make big money on Wednesday, right? Continuation on Thursday, yesterday, and now today you got a recovery. So why is it recovering today? All right, as we go down to the 4-hour chart, there's a pretty good explanation as to why it's recovering today. One reason is because it went on sale. It went up. All right, we saw the double bottom that we established on a smaller time frame on a 4-hour, right? It went all the way up. It hit the resistance line that we established on the daily chart. It rejected with a bearish engulfing on Wednesday, and it continued to drop down. We already knew where it was going to drop down to. It's going to be a support level based on the Fibonacci. So the Fibonacci gives us the 38% level, 50% level, 618, right? So the price dropped all the way down to the 38% level, and people said, okay, that's enough. That's a 38% off discount. I'm going to buy in. So people started establishing bullish positions on Thursday evening, right? And during the day. And now more people are getting involved in buying into the market. And that's why you see the incline today on Friday. All right. Based on this level. Another level that we have is a pretty strong monthly support level. All right. And we like to use the monthly pivots. We have monthly resistance, monthly support, monthly pivot. So the monthly pivot was established around $11,374.25, around that range. And if you look back, you can see that the market responds at that level. So back here in December 21st, you got a rejection and a drop off of that level. Up here at January 9th, you got a rejection and a drop on that level. Then you got a break above, a retest here on January 12th, a break above that again, came down and tested it again. You got buyer support here again, price went up. Now we're back here again, buyer support here again. So what it once was seller support here with a drop there and a drop there and a drop here. Now it's buyer support with price breaking up, testing. All right, buyers come in, buy it, come back, test it. Buyers come in, buy it, come back, test it. Buyers coming in, buying it. So that's your support level right there. So when we talk about understanding risk and reward and being able to make stop losses and know what percentage you want to give up on your trade opportunity, you can use support and resistance levels like this and previous price history to show you where the buyers and sellers actually at. And then there's ways that you can look at this stuff in real time, using the time and sales, or using the time and sales is probably the best thing to do. All right, but level 2 data gives you a real time visual representation of all the buyers and sellers that are happening by the second, basically. Every single buy and sell that's executed on the market, you can see it with the time and sales and level 2 data, and that's very useful for people who day trade, and that's what we like to use. So with that being said, you already have an established support level here, and you see that price is stopping. You got it. This is where you buy in. This is where you get a position. This is where you start to establish a position, and now it's easier for you to understand where you could potentially cut off your or stop your potential losses. Put your stop loss right below that support level and trade that all the way up to the previous high. All right, that's an opportunity for you to make another 2,600 ticks on a swing trade. All right, so if it works out. Now we go down to the 1-hour chart, and there's another thing that we could look at to help us gauge how the price is going to move. Now, as you can see in real time, you can see the price dropping a little bit, right? Why is it dropping? I'm going to do the same thing that I did on a bigger time frame, only this time I'm going to use it on the price movement when the price is going in this direction, right? So with that, I can put the Fibonacci on, right? Put Fibonacci on and measure it this way. As you can see, the price is up in this golden zone again, which is the 50% area, right? And this is where people like to buy or sell depending on the direction. So since the direction, the overall direction starting on Wednesday was bearish, there's still a lot of people who are trying to short the market, right? But we pushed up off of this support level, and once we pushed up off of this support level, we had to measure this move with the same understanding that we measured it in the opposite direction, just so we know what the potential may be. So when price starts to get up in these ranges, these levels, there's no way that you can be surprised at price slowing down. Now you look for signals like a bearish engulfing candle. This is a 1 hour chart. You get a bearish engulfing candle on the 1 hour chart in the Fibonacci 50% area. All of that kind of gives you an understanding on where the price may potentially go. And now you are talking about possibly dropping to the downside if buyers don't come back in. Now, the timing on this is 12:21 p.m. Central Time, 1:21 p.m. Eastern Time. A lot of people who are involved in the market and trade during this particular time, they are on lunch break for the most part. Probably coming out of lunch break here in a few. But when you have a situation like that, you know that the volume should be decreasing. So the people who came into the market earlier this morning are still active, but they're not as active because they take a break during the day. People on Wall Street, the people who trade actively, they got to eat to take breaks. So everybody is taking a break. Not everybody, but for the most part, the people who are involved in the market are taking a break. That means there's a huge drop off in volume. So if it took us all of this volume and momentum to get to the upside, and then all those people who are involved in this buying frenzy are going to lunch, what do you think is going to happen to the market when all the buyers are gone? It's going to end up being a lot more seller momentum. So if you look at the volume down here, you can see the upward move on volume and the downward move. The upward move on price and the downward move on volume. That right there is giving you a signal that this upward move may not be as official as we think. It's a possibility that we may be simply in a bearish retracement, which means that it could end up going back down again. And this time it will end up going back down farther than it did the first time. So yes, we do have a significant buyer's area right here, but that doesn't mean that this area is not going to keep getting tested. If you have all this bearish momentum coming in on Wednesday, you can't expect that the people who started shorting the market on Wednesday are no longer shorting the market. The market has cycles. It's not going to just drop straight down and go straight up. It's going to go in waves. It's going to go by the stairs. It's going to be retracements. That's why we use the Fibonacci. So now that you see this situation, it's a possibility that you may get price to come back down here and test this buyer level again. If it comes back down and test this buyer level again, and the buyers are not here to actually beat the sellers, then it will break through this level and drop to the downside. And now we're going to go we probably may end up going all the way back down to support of this bigger pattern that we saw on the daily chart. You feel what I'm saying? Now, what if the buyers come back from lunch and come back with the same energy that they had before? They're going to need a lot more because remember, the volume was dropping off as the price was going up. So you're going to need them to pick up that momentum the same way they did when the market first opened to break through this area right here. Remember, if it gets past the 618 level and starts to get up in this 78 level, the 786 level, to me, that's a signal that this bearish trend is over. It's no longer a bearish trend anymore. Now we're in a bullish trend for real. If it gets up into this range, you should be, the people who are in my program, everybody in here should be in a long position right now for NASDAQ and for the S&P. based on our strategy, but also on this logic. The only thing that should get you out of this is price breaking through, all right, this 38% support level and basically coming all the way back down to where you entered at. That there's no reason for you to get out. You feel what I'm saying? Because we don't know if the sellers are really taking over. We just know that everybody went to lunch. But what happened when everybody come back to lunch? Is it going to be buyer momentum or seller momentum? I think you should wait to find that out first if you haven't taken profit already. All right, I think you should be patient. All right, so that's my breakdown and understanding on the Nasdaq. We just talking about technicals right now. I'm gonna do another live stream and we're gonna talk about some fundamentals. I'm gonna break down the whole debt ceiling thing. I'm gonna break down, a couple other things that we gotta look at on a global scale and on the economic level when it comes to the United States and what we're dealing with. That's for another thing. Right now, we're just talking about pure technicals. So as you can see, which once it looked like it was some bearish engulfing energy. Now it looks like it's about to bring back some buyers. All right, it's 12:26 Central, 1:26 Eastern time. People are starting to come back from lunch, and now you're probably seeing an increase in volume and an increase in buyer momentum probably. All right, we'll see how that plays out. That's the Nasdaq. Anybody got any questions when it comes to that? I can do the S&P as well, but you're gonna get pretty much the same type of situation, just a little bit different for the S&P. So if we go to the weekly chart here, you can see similar type situation. I got a bearish channel right now on this one. All right, bearish channel. As you can see on the S&P, this kind of looks like a double top. So on the Nasdaq, it looked like we had a double bottom. On the S&P, it kind of looked like we got a double top. I'm not gonna play the inverse relationship game when it comes to S&P and Nasdaq because I don't think that that's the case when it comes to them. What I mean by that is just because you see a bearish signal with S&P doesn't mean there's a bullish signal with Nasdaq. I don't play like that. I go off of the technicals regardless of the relationship between the two. So as you can see, we already done pushed off of the low of October, and we pulled back already. So if I go down to the daily chart here, one sequence that we had already on here started with the fib, all right, and now you can see that price found a support level at the 50% area, right, and then it broke above the 38% area to the upside. But we have this resistance trend line right here. Let me turn that yellow so you guys can see that. All right, oops, that's not what I want. Man, I didn't mean to do that. Hold on 1 second. Don't want to do that. Let's go back to the default. All right, so what I wanted to do was turn this blue line to yellow so you guys can see the pattern. All right, so that is there, and what we did was basically we got to understand where resistance is. So every time price gets to this resistance level, this yellow trend line, it pretty much drops or rejects it. Even with this huge wick, we broke out, and then it came right back in, tested it again, and then dropped. All right, same thing. Thursday of December 15th, dropped all the way down, 50% area, consolidation, pushed all the way back up. All right, pushed all the way back up. Now you have a trend line right here where price is going back to test resistance again, and then again on Wednesday, huge rejection to the downside, push back down. We still got to put the fib on, so we go down to the 4-hour chart. Same type of situation. You got the pivot for the month here, you got resistance there, and you got support all the way down there. We can't even see it. Consolidation right here, right? Pushed up, retraced. That was about a 38, 50% retracement. Pushed all the way up. All right, now we're retracing again. We're back in the golden zone here, and we're pushing out of that right now. So that's with the S&P. Most of you guys should be in this long right here, right now, today. All right. So what do we think this is going to go? We go down to the 1-hour chart. Same type of scenario. So let me take this off, all right, and put a fib on in the opposite direction for this bearish move to start on Wednesday. We're measuring that. All right. 38% area. You see how people just started closing out their long positions? Now you got some buyer momentum in here. If you zoom into the candle, you can see that almost looks like a morning star. All right, rejection candle, 3 wicks at the top. All right, I wouldn't be quick to close out yet. Remember, the volume is dropped off because people are at lunch. What is going to happen when the people come back from lunch? That's really what I want to stick around for. It may be buyer momentum, it may be seller momentum. We don't know, but we saving ourselves some time by buying at a good price, right? So we bought somewhere up in this range. Some of us came in late and bought up in this range. But either one of these areas, like anything up in this area, was a good buy. It was a good buy. Let's say, for instance, you came in at the close of this 9 o'clock candle. You at one point you had a potential to take 74 ticks from the market. That's almost $1,000. It's almost $1,000 in 1 hour. All right. So depending on where you decided to buy in at will determine where you're at as far as your P&L is concerned. I don't really have no signals to tell me to definitely close the trade. Plus the timing of everything right now, it looks like people are coming back from work. I'm sorry, it looks like people are coming back from lunch. So you might want to stick around to see what's going to happen because it's a potential that price could break through this 38% level and get all the way up to the golden zone. All right, that's a possibility. If not, if it rejects and drops, we already kind of know where it could potentially drop down to. All right, we zoom out and we can see that you have a reject. If it rejects and it drops all the way down, probably going to come down and test the support level of this trend line once again. So that's how you pretty much trade inside of the pattern. You definitely want to make sure you are doing top-down analysis, going from the monthly, weekly, daily to find bigger time frame chart patterns. And if you can find those bigger time frame chart patterns, you could enable yourself to have higher probability trade opportunities based on what you see as far as support and resistance and how price is moving. It's best to trade when price is at support or at resistance because you get to minimize your risk and pretty much maximize your reward and have a lot better understand where price could potentially go next. If you try to take trades in the middle, right, where you're not around support or resistance, your probability of losses are going to be higher because you don't really know where it could. You don't know if you're in a trend. You don't know what's going on really. You dig what I'm saying? You don't know what price is going to do. You never really know what price is going to do, but you have a better understanding of it if you understand where support and resistance is at. All right. Appreciate y'all for joining in. All right, definitely appreciate that. I just want to make sure we come in here and give you guys an opportunity to gain some understanding this Friday. All right, so even with that being said, maybe you wasn't able to catch this trade. Maybe you wasn't able to do anything this week when it comes to trading. You could prepare for next week. All right, all you got to do is make sure you are monitoring what happens when the market closes today, and then you can have a good understanding on what we need to be preparing for the next week. All right, so that's big. That's big. If you guys got any questions, comments, definitely drop them in there, and I'll get to you. And if you want to learn how to trade, you could go to courtsideTradingClub.com and join my program. All right, where I teach you how to trade futures, and you can utilize this information to, pretty much remove the cap from your earning potential, because we have students who are getting funded $100,000 and up, utilizing the skill of trading and gaining access to other people's money using the prop trading companies that are available, passing these evaluations and getting funded. And that's the beauty of this business. The fact that you don't necessarily have to have a whole bunch of money to start out. You just need a skill set. And that's pretty much what I teach. I teach you the skill set. So appreciate y'all for joining. And I hope I was able to enlighten you and give you some good information on what this market is doing, make some sense of it. All right, you want You want to be able to take noise and make sense out of the noise. You know what I mean? And that's what understanding technical analysis is, and understanding how to read these charts. That's what you are able to do. You're able to take all this noise, all this up and down, all these candles, and be able to read them, understand them, apply logic to them, and then make investment decisions based off of them, whether it's short term or long term. All right. Appreciate y'all for joining, and I will see you guys later on. We'll do another live stream to break down the debt ceiling, what that is, and why it's important, and why you should be aware of it, and how you can potentially benefit off of it. All right. Appreciate y'all. Peace.